Welcome to On the Money right here on WDBO AM 580, always streaming inside your WDBO app. This is your chance to hop on the air, hop on the couch next to a couple of certified financial planners with the Certified Financial Group. It is a figurative couch, of course, but we're just imagining a lounging conversation where something may have popped into your mind about your financial future. Maybe you saw something in the news. Maybe you saw something in the trades. Maybe your neighbor is saying something crazy, and you want to be able to sound smart when you say you're wrong, neighbor. That's what Rodney Ownby and Chris Toadvine are here today hosting On the Money, as the team at Certified Financial Group has been doing for over 30 years on the airwaves of WDBO. Rodney, Chris, how are we doing today?
Good morning, Josh. How you doing?
I'm doing just fine today.
Good. Yeah, so Rodney and I are here this morning to take calls from listeners live. We're taking calls. This is not a 1 hour infomercial. This is a 1 hour live show. So we do encourage our listeners out there, if you have questions as it relates to personal finance, please pick up the phone, give us a call. We're good guys. We don't bite, I promise. And I would be remiss if we went any further without first wishing all the moms out there a happy Mother's Day. So right. It is Mother's Day weekend, and we love our moms, and we wouldn't be here without them. So, right. We're thankful for moms and hope that they have a great day tomorrow and get celebrated appropriately. So, but so we gave Joe the weekend off, Rodney, right?
That's right.
Weekend off, so we figured he needed a break. And
rumor has it he's listening.
Yeah, he probably is. So he's not totally getting a break, but he's resting his voice. And but Rodney and I are here, Josh, as you said, and like Certified Financial Group has been for over 30 years. Think about that, 3 decades. That's a long time, really. Throughout the week, we do this financial planning and investment work for clients. We charge a fee, but today there is no fee. It's free, and so we're here simply to take calls and answer questions that you may have as it relates to your personal finances. Those questions could, fall in lots of different areas. It could be investment related, stocks, bonds, mutual funds, exchange traded funds, insurance type products, which always seem to confound folks, life insurance, disability, annuities, all that kind of stuff, retirement accounts, the alphabet soup of retirement accounts, 403B, 401k, 401a, 457, simple SEP, all that, the different types of retirement accounts, so retirement planning, estate planning, charitable planning, whatever's on your mind. Rodney and I are here to take your calls. So there's no dumb question, as they say. Truly, there's not. And I know meeting with folks, it's the world has gotten more confusing as it relates to personal finances, Rodney, and it can be hard to know what is true and right, and so we're here to give you at least our opinion and our thoughts. So pick up the phone and dial these magic numbers, Josh.
844-580-9326, 844-580-WDBO. And what Chris said a second ago, he means it. There are no dumb questions, because when the mics turn off here on the studio, I will ask them all kinds of questions during the break, and they answer it as if I am just the nicest person in the world, when I know this is not the most highly educated question that somebody could ask. So any question, from a Josh McCarthy question all the way to a smart Warren Buffett question, maybe you can call in right now, 844-580-WDBO, or send in your open mic using the WDBO app. A little tease towards our topic today: Warren Buffett's retirement. What's next for Berkshire Hathaway?
Yeah, that's right. This was the big news in the investment world this week, right? Last Saturday at the Berkshire Hathaway annual meeting, Warren Buffett, 94 years young, announced his retirement. Much anticipated. People have been talking about it for years. And
so much for retiring at 62, huh?
Right. Exactly. Yeah. Exactly.
I think Warren broke the mold, truly. And
for sure.
Thank God for him and the shareholders. He was, he's sharp too, but he recognizes, I think, that it's time to pass the baton. So it was, I'll say, kind of maybe not earth-shattering, but it came as a surprise. What, in the last 5 minutes of the annual meeting or something?
Yeah, he held it till the end of the meeting, and then he made the announcement. And I listened to an interview with the gentleman who was there, and he said that he was actually more energized this year than he was last year. And they had speculated that because Charlie, his longtime business partner, Charlie, had died just a couple months before that meeting.
Yeah.
That he was sort of down last year and back up this year, more like himself.
Yeah.
So I think that made it a little surprising.
Yeah, no, I think it caught a lot of folks off guard. I was not expecting it. You know, you kind of know it's coming at some point. 94, you know,
Right.
He's beat the odds, so to speak. But,
Exactly.
still going strong and going to work every day and having a good mind, and maybe the two go hand in hand. You know,
Right.
that we're keeping him sharp. But,
Exactly. Playing in extra innings is how he
yeah,
characterized it.
yeah.
But the stock, and we'll talk a little bit about some of the accomplishments over his 60 years in charge of Berkshire Hathaway, but the stock closed at 540 on the B shares.
B shares. But the A shares, Rodney, I think you own several hundred of those. What are the A shares going for? Do you know? I looked it up this morning.
550.
770.
770?
999. Yes.
Wow.
Yeah, almost $771,000, folks.
Wow.
So that's go buy a few of those. But
Wow.
Nonetheless, isn't that crazy?
It is.
Yeah.
It's unbelievable.
So, and for the listeners out there, Rodney, maybe quickly distinguish between the A and B.
So they track with each other. I mean, they're both shares in the company, but the B shares are a little better price point. They're trading the $500 a share range versus the $770,000.
More affordable.
Right,
Yeah.
exactly.
Most people can't buy the $771,000 share.
Right.
Yes.
Exactly. But the shares were down. So on Friday they were up. They had been down a little bit with everything going on in the economy, and they had reached sort of a peak of around 540. This is the B shares again we're talking about.
Mm-hmm.
And Monday they closed down 5%, which is sort of what people anticipated. That when he announced his retirement, that maybe the market would respond and the shares would go down.
And why is that? For listeners, why would the market all of a sudden say, hey, the company is worth 5% less today than it was a business day ago because Warren's leaving?
So, and we'll talk a little bit more about some of the accomplishments, but he's considered the best investor in history. And he's led that company over a 60-year period to returns that double the S&P 500.
Yeah, that's remarkable.
20% versus 10% for the S&P 500, which is still excellent. And he's doubled that.
Yes. And we could even talk about reasons for that if listeners are curious. But what else you got there, Rodney?
So some of the accomplishments before we get it. He's been working on the succession plan for the company for over 15 years now, and we'll talk about some of those individuals. Interestingly, all the brain power and all the different individuals that he's assembled to replace him, one person.
Yes.
And I guess technically Charlie too, but he's really the investing brains of the whole operation.
Mm-hmm.
But if you look at since 1965, Berkshire Hathaway was a failing textile company that was on the verge of bankruptcy.
I remember Berkshire Hathaway shirts way back when.
Right,
Yeah.
exactly.
Yeah.
And it is now a $1.16 trillion conglomerate.
Wow.
So, on the verge of bankruptcy to over $1 trillion valuation.
Wow. That's a turnaround.
Over his career. If you compare performance, like I said, he's averaged 20% annual returns over the last 60 years. S&P 500 is 10%, so he's doubled that. So $100 in 1965 when he purchased the company, in the S&P 500, $100 would have gotten you $39,000 today.
Not a bad return, right?
Not bad.
I'll take that.
It's excellent, yeah. But what do you think, and you may know this, what do you think $100 in 1965 in Berkshire Hathaway would be?
Well, look, the double the returns compounded over that period of time is substantial. So if it's 39,000, it's got to be over $1 million. I'm going to guess
5.5 million.
Wow, geez, think
Huge.
about that, folks.
Huge.
Everybody'd like to turn $1 into 5.5 million. Imagine
Right.
that. You invest $1 for a child when they're born, and by retirement, you got $5.5 million. That's
$5.5
crazy.
million.
Imagine if you invested $100 for them.
Right.
At that rate, geez.
Right. Exactly. And this was $100, so
Yeah.
still the
Yeah.
example
Gotcha.
remains exactly. Yep. And then we can start to look at when he started planning succession. It's interesting. Someone said to me, I can remember probably 15, 20 years ago, they said, well, I would never buy Berkshire Hathaway because Warren's 76 years old and he's got to retire soon and the stock's going to tank. Well, that was almost 20 years ago.
Yes.
And look at what's happened in that time period. But he did go about building a very strong succession plan over the last 15 years. And we can look at the backgrounds of some of those individuals that he brought in over the last 10, 15 years.
Now, what do you mean when you say succession plan, Rodney? What is that?
So that means who is going to fill his shoes once he decides to step aside and not be running the company anymore.
Yeah.
So let's look at a couple of the backgrounds of a couple of these gentlemen that he's put in place to take over different aspects of the operation.
Yeah, let's do it.
We've got Todd Combs, FSU grad, which
Go Knowles.
that's right. MBA from Columbia,
Yeah.
which is also where Buffett went and where Buffett met Benjamin Graham
Wow.
at
Yeah.
Columbia. And his first encounter with Buffett was Buffett gave a presentation in one of his classes.
Interesting.
And
So Warren was an ambitious guy back then.
exactly,
Yeah.
for sure. And the interesting thing, he met Warren. He saw him in the class that day, but he actually met him years later. He befriended Charlie Munger, Warren's partner, and had lunch with him a few times. And then Charlie's the one who suggested that he sit down and talk to Warren. But someone in that class that day asked, what does it take to be successful at investing? And Warren picked up a ream of documents about the size of 500 pages on the desk there. And he picked it up and he said, develop the discipline to be able to read 500 pages a day. And
Wow.
Todd,
That's a discipline.
he took that to heart. And he said he actually got up to somewhere between 600 and 700 pages a day.
Can you
That he
imagine?
could-
Wow.
I can't even imagine. I was looking at this and researching this yesterday, and it blew my mind. I knew they spend 12 to 14 hours a day reading, but
Yeah. Wow. Yeah. That's
6 to
that
7
is a
pages a
discipline.
day.
Wow.
and talking about compounding, that's what Warren says. He said that knowledge that you build from reading that much has a compounding effect over time. I mean, it certainly bears out in the returns.
Yeah.
That they
That's
generate,
remarkable. Yeah.
for sure.
Okay.
And then the next gentleman, who is sort of the investment brains of the outfit. I guess we're up against the break here.
Yeah, I hear some music there, Josh. So hold that thought, Rodney, and we'll be back to pick up on kind of walking down memory lane and thinking about Berkshire Hathaway when we come back.
You got it. If you want to join us on this walk down memory lane, maybe a yellow or a green brick road as we head towards the Berkshire Hathaway memories, pick up the phone right now. Dial in 844-580-9326. Send in your open mic using the free WDBO app. Or if you got a question about your financial future while we talk about the nation's financial past, you can call in right now, 844-580-WDBO. You're listening to On the Money, where we're planning tomorrow
Today,
with the Certified Financial Group.
Years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're a certified financial group, but we're planning tomorrow, today. Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to the Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're a certified financial group, but we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now 2 wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course. You stay the course, and you get there.
I don't have to worry about it like I know a lot of people look at it every day. I don't have to do that with the team here at Certified Financial Group.
We're Certified Financial Group, but we're planning tomorrow, today. Are you tired of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
Waiting for you to call almost. You almost feel like that.
We're Certified Financial Group, but we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards.
Welcome back to On the Money, brought to you by the Certified Financial Group here on WDBO, AM 580, always streaming inside your WDBO app. We got Rodney Ownby and Chris Toadvine here guiding us through another great hour of On the Money. If you want to join us, 844-580-9326 is the number to call, 844-580-WDBO, or send in your question using the open mic feature inside the WDBO app. Rodney, Chris, back to you.
All right. Well, we're gonna keep walking through. We're talking about Berkshire Hathaway and the somewhat surprising announcement that Warren Buffett was going to step aside. I guess he's still going to be chairman of the board, right, Rodney?
Right. And somebody said that they announced that on Monday to sort of stop the slide in the stock price.
Yeah. So he'll still be around and influencing, to some degree the company, but he's handing over the reins officially, and that's what we're talking about. Just business succession is an important topic, certainly, and Warren has been planning his for the last 15 years or so, and so I think, Rodney, you were going to walk through some of the key characters and what they're doing.
Yeah, so just to hit the highlights on the others, Greg Abel is the CEO, so he's actually stepping into Warren's shoes as the leader of the organization. He's currently, he's CEO now, but Buffett's stepping down at the end of the year, right?
Yes.
So he's head of Berkshire Energy, and he came over in an acquisition a couple decades ago, so he's very familiar with the operations of the company. I think in terms of temperament, I think has the willingness to be the front man.
Yes.
And take on a lot of that spokesman role that
public
Buffett's
facing.
had.
Yes.
Exactly.
Although no one will do it like Warren.
No one,
folksy and
right,
have a hamburger and a Coke.
Right.
And,
right.
let the cameras follow him in his favorite restaurant that he's been eating at, in the same booth.
And they have a box of the C's chocolate on the on the desk there while they're doing that.
That's right. Yeah.
Yep.
Which for our listeners out there, Berkshire Hathaway owns C's Candy. If you don't know that, so
another interesting story there. If we have time, we'll talk about that
Yes.
too. But the other gentleman there is Ted Weschler. He's a Wharton grad, and he managed Peninsula Capital Advisors. And actually, there's a lunch, and they've been doing this for about 20, 25 years. Buffett auctions a lunch for charity. And Weschler, he bought 2 of these, or he won the auction in 2 of these successive years there, and he paid $5.3 million to have lunch with Warren. And they hit it off, and Warren hired him at the end of the second lunch. The story goes that Warren hired him.
Wow. Weschler was doing okay on his own to pay $5 million for a lunch.
Right, exactly.
Obviously, but he worked himself into a pretty prestigious and unique job.
Exactly, for sure. And then Ajit Jain is the one who's sort of more in the background, but Buffett's characterized him. He's head of the insurance.
Which the insurance, Berkshire, for listeners out there, Berkshire owns, Geico, of course.
Right.
Most people are familiar with that, but a couple, they do reinsurance, so they provide insurance to insurance companies, and it is a very profitable portion of Berkshire Hathaway's business. So.
Exactly. They collect those premiums, and there are no claims against those premiums, at least initially, and they invest that for return. They call it the float.
Yes.
But Buffett has characterized Ajit Jain. By the way, he's an institute of the Indian Institute of Technology, which is the MIT of India.
Yeah,
he's a graduate.
Smart guy.
Yeah, Harvard MBA as well.
And doesn't Buffett say he's the best underwriter in the world?
He's the most brilliant risk management mind in the world.
Isn't that something? That's a claim to fame.
That's how Buffett characterized.
Coming from Warren Buffett.
Right, exactly. Pretty good team here, right? That he's assembled in terms of succession. And then his son too. His son has been on the board for 30 years. His son is Howard Buffett.
Yes, and more to kind of steer and influence, and
exactly.
I think be the conscience maybe to some degree. But I don't think is he involved in day-to-day operations?
Not at all involved in the day-to-day operations.
Gotcha.
And he will also be in charge of the distribution of Warren's wealth, his massive wealth and estate.
Which is pretty cool too.
Right.
So for listeners out there, I think he committed 06 or some years ago to giving away like 99% of his net worth, which is substantial. I don't know. It's in excess of $100 billion. I know that. So
he's 4th richest, I think, in the world.
Yeah.
And he's at 140 billion or something.
And he's lived in the same house for 50, 60 years.
Yeah. 50 years. Yeah.
And the joke was he drove, something of a not late model Cadillac, and so he has all he needs. But Josh, I hear a little bumper music. I think we're on a break here. We'll come back, and I think I see a text question, and then we'll pick up where we left off with Berkshire Hathaway and Buffett's legacy.
Thank you so much. Chris Toadvine, Rodney Ownby, 2 certified financial planners with the Certified Financial Group. If you want to call in right now, we got open lines, 844-580-9326, 844-580-WDBO. Send in your open mic using the free WDBO app. You're listening to On the Money, where we're planning tomorrow
Today
with the Certified Financial Group.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in and you say, hey, Lou, I'm barbecuing this weekend, right? What do you like? And Lou goes to the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal? Oh, I like veal. Well, what do you got on skirt steak. Oh, we got some great skirt steak. Just came in yesterday from Montana. Skirt steak is one of my favorite, marinated up a little bit. It's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's going to look at all of my labs, she's going to take all the measurements, she's going to run all of her analysis, and she's going to absolutely give me her best thinking on what's best for me. Whether she's a vegetarian or a meat lover, likes this, likes that, if she thinks I should be doing something differently, even if it's not good for her, she's going to give me an opinion that's for my interest. So what's the difference between a fiduciary and the brokers? Well, these are dietitians, these are butchers. It's that simple. Brokers are butchers selling product. Fiduciaries are dietitians looking after your health. The problem is most people think that their butcher is a dietitian. So when one of your moms or dads or friends calls the broker and says, I got 200 grand, I sold a little piece of property, or I got some inheritance, what should I do with it? They're going in thinking they're talking to a dietitian, and they're really talking to Lou the butcher.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
40 years ago, I had a dream of building the best personal financial consulting firm in Central Florida. Now, with 14 certified financial planners acting as fiduciaries, I believe we're there. But don't take my word for it.
As we approach retirement, we have the freedom of choice.
Peace of mind that we now have, that's everything to us.
The people that work here are honest and caring, and I feel like I can go to sleep at night.
So schedule your no-obligation visit today at financialgroup.com, where we're planning tomorrow. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, where we're planning tomorrow, today.
Welcome back to On the Money here on WDBO AM 580, always streaming inside our WDBO app. This is your chance to hop on the air, hop in the conversation. We got Rodney Ownby and Chris Toadvine, two certified financial planners from the Certified Financial Group, getting us through another great hour of On the Money. If you got a question about your financial future or maybe the country's financial past, call in right now, 844-580-9326, 844-580 WDBO. What do you say, Chris and Rodney? We got Bill calling in. You want to go talk to Bill?
Yeah, Bill, what's up? How we doing, Bill? Good morning.
And Rodney, I'm glad you two are available. I know you've got a unique set of skills that you've acquired over a heck of a good career. But what I'm calling about, I'm unemployed, selectively, I guess, retired, we'll call it.
Okay.
I'm done working. But and as such, I've got a moderate moderate pension as an income that's taxable.
Yep.
And I have my 401k and IRA that's rolled out of my 401k that supplements my pension. And I do Roth rollovers because even though I did have Roth 401k that I funded as much as I could prudently, I'm rolling money from my traditional into a Roth.
Right.
This year I already did it because it seemed like a good time when the prices were down. Well, when my equities were down and everything, I did in-kind rollover.
It's a good idea, Bill. I like how you're thinking.
Yeah, I appreciate that, and I'm flattered. But in doing that, I do a good time where those select stocks were down. And since then, they've come up to gain more than I owe in taxes for that conversion. So on that basic idea, two related questions. One is, since I did that Roth conversion the first quarter, I think it was actually, I did it in the second quarter, April.
Okay.
So do I have to pay the taxes at the end of the quarter for that conversion, or since it's a Roth conversion, can that be done at the end of the tax year?
Yeah, well, that's a very good question, Bill. I mean, we appreciate you calling, and thanks for reaching out. I think it's a savvy question that many people probably wouldn't even think about. They just do the conversion, then they figure it out next year. But what a lot of folks may not realize is taxes are pay as you go, and so if you don't pay as you go enough, guess what? The IRS is going to charge you a toll, also known as a penalty, for underpayment. So I think that's what you're getting at here, is really asking, how do you avoid that? Is that fair?
Sort of, because I always pay them at the end of the quarter.
Gotcha.
It seems like I heard somewhere that for a Roth conversion, or for some reason, for some purposes, financial purposes, it isn't due during the quarter. You can wait until the end of the year, and I don't know if it's...
Well, look, Rodney, have you heard that? I have not heard that myself. I'm not familiar with that rule, but what I know is, there's what's called a safe harbor amount, Bill, and that says to avoid a penalty, you have to pay 90% of your current year's liability or 100% of your prior year, depending on your income. And if you're considered high income, which I want to say for this, there's lots of different thresholds out there, but I think for this, it's $75,000 for an individual and $150,000 for a married filing joint, I believe. So if you're above that, they consider you high income, and you then have to pay 110% of the prior year to avoid a penalty. So, I think if I were thinking about this, Bill, and if I were in your shoes, my calculus would be, how much am I paying in already based on last year's liability, and how much, it sounds like you're pretty savvy and you've done some math here, because you said that, your account's gone up by enough to pay the tax on it. So you've estimated what that tax is. And so in light of that, I guess whatever that amount is, how much are you really going to earn on that if it sits in the bank? In other words, you might be able to get away with paying less, but is it really worth it? Because, I wouldn't put that money at risk if I knew I owed it to the IRS. So, I think what you can do and what you should do may not be the same there, but I think that safe harbor rule is what I would follow. I am not familiar with the exception that may be granted to Ross, and I'll have to look that up, Bill, and see, because there's lots of nooks and crannies in the tax code out there, and that may just be one that I'm not familiar with, but I think the safe harbor will definitely keep you safe from penalties. Does that make sense, Rodney?
It does, and you want to pay it in the year. So, there may be a little timing difference. Maybe catch it up in the third quarter, but you want to pay it in the year.
Yes, because timing does matter. If someone does not pay taxes, you're like you said, you pay 4 estimated payments, Bill, and if you just skip out on the first 3 and pay the last one, you'll get a penalty. Now, here's something that a lot of people don't know. If your taxes are paid from IRA withholding and sent to the IRS, it's as if it was paid throughout the year. So, but you said you actually pay yours. But I've had a few clients where they were a little short at the end of the year, and we did an IRA distribution, withheld 100% for taxes. So from a timing standpoint, they didn't get the hit. So
because it came from the IRA.
That's right. That's because that portion.
Right.
Yeah.
Yep.
So does that help, Bill?
It helps because last year I did my conversion in the last quarter of the year. And when I do a conversion, it's 100%. As you know, a conversion is basically a distribution, and it's taxed as such, a distribution.
Yes,
right. And at the end of the year, of course, I can tell better if I'm in the 10% or 12% that I try to keep in.
Right.
I nudged above the 12% tax bucket by like $400. So I did pay the next higher bracket for $400 worth, which I don't really, that's not a big thing.
Not a big deal.
No, yeah, and it's smart to keep that as your threshold, the 12%, the top of the 12% bracket. Also smart to convert when the stocks are down. That was a good move too.
Well, and big picture, let's don't miss the forest for the trees, Bill. You're systematically doing this, right? And that's what I have a number of clients that we do this every year. It might be 10, 15, 25, 75, whatever. Everyone's situation is different, but I think the key is systematically managing that and getting more into that Roth bucket is long-term very beneficial for you.
Yeah, at a low tax rate.
Yes.
Right.
So does that help, Bill?
That helps, and it leads into, I think we kind of touched on the surface of my second half of the question is, now we've already discussed, I'm going to go ahead and pay that amount. I'll pay 10%, or no, I'll pay 12% of what I transferred out to taxes during this month. I'll go ahead and transfer that over to the IRS electronically. And now I'm looking at what I want to take that out of, because other than my pension, that pays for about half my expenses,
okay,
my household expenses. The rest comes from my 401k, and since I'm not planning on taking Social Security till I'm 70, I plan to draw mostly from my traditional taxable 401k IRA until I start pulling Social Security. Now, should I pay that Roth conversion tax from that amount that grew in the Roth account? Or is it more prudent to take it from the taxable amount and pay that in my pension from the general fund, basically?
So in other words, do you take a distribution from the Roth that you just put in to pay tax, or do you take it out of your 401k taxable retirement money? Is that what you're asking?
That's right. And the reason it matters to me is that, of course, if I pay it from the Rothable amount, it doesn't add to my taxable amount for a year, and it bump up my tax rate by that amount. It leaves me that much more.
Yeah. Yeah, but you're trying to maximize that bucket, right? That tax-free bucket.
Yeah, and so since it went up, the Roth went up that amount in a week or two, I guess. That's like a nit that it's basically like getting that tax money for free.
Yeah. Yeah. So you look, here's what I would do, Bill. Okay. I would leave the Roth alone.
Right.
Again, once your Social Security starts, that spigot won't get turned off, and you'll have that income, and then, anything you pull out of obviously your 401k or IRA at that point will be added on top of that. So I would not take out of the Roth. As Rodney said, the idea is to build that bucket up. That is the most favorable investment bucket any of us have, because it grows deferred and it comes out tax free to you or your heirs, and hopefully you're going to go spend it and enjoy it. But just because you hit a home run right out of the first inning, that's okay. You can hit a couple more, be an Aaron Judge, right? And let that money continue to grow and compound. So it's great that you did it when the market was down. But look, I hear you. You went a few $100 into the 22% bracket, but that's okay, because here's how I think about it. What is your average tax rate, right? So you pay 22% on $400. So you paid $88 or something. That's okay. Still on average, if you take what you pay in tax over your income, what are you paying? And my guess is it's low. It's something, a 10 or less. It's less if you factor in your standard deduction, if that's what you're taking. And so, consequently, I think that even if you take a little extra out of your 401k, and you said you're submitting it electronically, you can have it withheld from the 401k, presumably. I mean, a lot of 401ks are going to mandatorily withhold 20%. Right. So, I don't know if yours is something different than that, but that would be more than you really need, which, would be a reason to consider moving the 401k to an IRA, because in an IRA, you don't have that mandatory 20%. So I don't know how you're navigating that. But just to close the loop, the long and the short, I would not take it out of the Roth. I would take it out of your other funds. And, the idea is you whittle that one down through your systematic conversions and living, and then once you get to Social Security age, you will you'll have your Roth funds and presumably some other funds in the 401k. Does that make sense, Bill?
It does, and on what you said, I already, since I have my 401k, that's what Lockheed Martin that I've been with for almost 40 years. I transferred, rolled out a good chunk of money, about 10 years worth of living expenses, to an IRA about 6 months after I quit my job there.
Gotcha.
And that is what I use to draw on and for support and everything from the IRA. I don't really, other than managing the 401k, I leave the remainder of that there to grow over many years. Yeah. So I am only taking from my IRA, which is with Fidelity. Mm-hmm. And like you said, I do have them withhold the tax on my normal distributions that I take as needed. Mm-hmm. They let you select whatever percentage you want, say 10%, 12%.
Yeah. Well, listen, I think we're up on a break, Bill, but we really appreciate the call. I hope you got your question answered. You could even do a special one-time distribution, like say, hey, Fidelity, do $1,000 distribution, withhold 100% of that in lieu of going online, okay? So that would be something else to consider. But great call. We appreciate you reaching out. Josh, I know we're up on a break, so we'll let you take it away.
Consider it taken. If you want to call in, 844-580-9326, 844-580-WDBO, or feel free to send in an open mic using the WDBO app. We got Rodney Ownby and Chris Toadvine getting us through another great hour of On the Money. You're listening to On the Money, where we're planning tomorrow,
today,
with the Certified Financial Group.
Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're Certified Financial Group, where we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, where we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now 2 wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course. You stay the course, and you get there.
I don't have to worry about it like I know a lot of people look at it every day. I don't have to do that with the team here at Certified Financial Group.
We're Certified Financial Group, where we're planning tomorrow, today. Are you tired of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
Waiting for you to call almost. You almost feel like that.
We're Certified Financial Group, where we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever.
Welcome back to On the Money here on WDBO AM 580, always streaming inside your WDBO app. We're fortunate to have Chris Toadvine and Rodney Ownby guiding us through another great hour of On the Money. If you want to call in, just a few seconds left of today's episode, 844-580-9326, 844-580-WDBO, or you can send in an open mic using our free WDBO app. Chris, Rodney, how are we doing so far?
Yeah, Josh, hey, we're doing great, thanks. And Rodney, I think you're going to share with our listeners, we've got some upcoming workshops here in the next, over the summer. Hard to believe we're already in May and looking at the summer. But Rodney, what do we got?
These are in the heat of the summer here. These are July workshops.
Right, but it's air conditioned inside,
yeah,
right?
Yeah,
we promise to have the air on.
We're covered there.
That's right.
So we got Savvy IRA Planning for Boomers, strategies to help you save taxes and get more out of your IRA. And that is July 12th. From 10 to 11:30 a.m. here in our Learning Center. It's hosted by Dave Balakrishnan.
Yeah.
And
So
then-
July 12th, and they can learn more about that at financialgroup.com, right?
Financialgroup.com, that's right. And then on July 26th, we've got tax efficient investing and distribution strategies hosted by Gary Abley. And that's from 10 to noon here in the Learning Center.
There you
Again,
go.
that's July 26th.
July 12th and July 26th. So the week after Independence Day, you can learn about IRA planning, and a few weeks after, tax efficient investing.
That's right. And we've got a full house today, actually. We've got the tax planning strategies through the 4 stages of retirement.
Great, great. All right, yeah. So and listeners can learn more about those at financialgroup.com to learn more about that and about what we do here day by day, which is helping folks navigate through questions like Bill just answered.
That's right.
Related to what is the best way to do this, and this being financial planning that is so unique to each individual. So, Josh, do we have a text question? It seems like I saw one pop up there.
We sure do. This one comes to us from Peter. Peter wants to know, what are y'all's thoughts on interest rates and the Fed's decision this week?
Oh, boy. What do you think, Rodney?
So they held steady this week, right? And I know there's some pressure from the executive branch to lower rates, but there's concerns about inflation. We've even heard the word stagflation, which is rising prices with a stagnant economy.
Not a good combination.
Not a good combination.
Right.
It harkens back to the 70s. Right?
Oh boy, yeah.
So that was essentially the rationale. Is it's just that they don't want to fuel inflation because there's still inflationary pressures that they're.
Is that a good or a bad thing? What do you think?
That the fact that they held rates steady.
Yes.
Yeah, I think that's a prudent decision.
Yes.
Given everything that's going on.
I think Jerome Powell's got a really tough job, and I personally think he's done a pretty good job.
Yeah, and I
navigating.
watched the press conference, and I think you and I even talked about it. It looks like he's aged.
Yeah, 10 years in the last
10
year.
years in
So
the last
poor
year,
guy.
exactly.
He's, so
Smart guy, though.
yes, very smart guy. So okay, well, listen, that's So hopefully that helps Peter. What do we think about the decision? I think we think it was probably the right idea. And, the Fed meets, every 6 weeks, Rodney, or so, something like that. So they have another meeting coming up. But I think the market expectation is that the Fed will probably lower rates a couple times this year. So, but wait and see. They are what, Rodney? Data dependent, right? That's the word, data dependent. So
data driven.
So, and it's, we went through the April after Liberation Day, or as someone called it, Liquidation Day. The market went through a pretty big sell-off, but has rebounded and basically recovered all that ground. And so, we'll see the net effect of that, though, because April was not a pretty month for trade. So sometimes there's a lagging effect to that. But so we got some workshops coming up. We talked about that. Financialgroup.com. And you can learn more about what we do there, about the workshops, and you can, if you want to sit down with a planner here, you can also do that at our website, financialgroup.com. And we're here Monday to Friday to help serve our clients and to help serve you if you have these kinds of questions and need help, and a trusted advisor to help you navigate that. So, Josh, take it away.
Thank you so much. Thank you so much. And you have just listened to On the Money, where we're planning today with the Certified Financial Group.